Hi, I'm Steven Wener of Whistle Realty, brokered by EXP, all things residential real estate. And today I have the pleasure of having Miss Amanda Keith with me, and she is a home equity retirement specialist with Mutual of Omaha. How are you?
I'm great. How are you today, Steve?
I'm doing awesome. So in California, specifically San Diego where we are, we have a very interesting real estate market where at this point in time, median price point is over $900,000. And being in real estate, I understand the challenges, the financial challenges that happen to the people I work with or my longtime clients that I've helped get into properties years and years ago. With the escalating costs and inflation, people find themselves desperate and running out of money. So, your solution. I would love for you to tell me how your solution transforms lives and what it does for the people that come work with you, and especially the testimonials after they've worked with you about how it has transformed their lives. So what does it look like? When are people coming to you?
Well, I work with a number of baby boomers. 55 and over is my demographic, so 55 up to any age.
Yeah.
And clients usually come to me if they're looking to downsize or if they're looking to tap some of the equity in their home.
Okay.
I provide a lifestyle loan for people looking to downsize, and that increases their purchasing power by about 45 to 100%.
So what does that mean, a lifestyle
Yeah, a
change?
lifestyle loan is for buyers,
Yep.
62 or over, who are looking to downsize. And usually buyers think that if they're going to sell their home, they're thinking, okay, well then my next home, I need to either get a mortgage,
Yeah.
put 20% down and have a monthly mortgage payment, or maybe I won't get qualified for a mortgage, so then I would need to pay all cash.
Okay.
So sometimes those two options aren't desirable to
Sure.
people. So I provide a third option, which is a lifestyle loan for people 62 and over. It allows them to sell their existing property and purchase their next primary residence with a one-time down payment of about 60% and no monthly mortgage payments. So that means that client that walked away from the sale of their departure home with
Sure.
$1 million in their pocket,
Yep.
instead of getting a mortgage on let's say they're looking at a property that's $1 million.
Yeah.
So instead of either getting a mortgage and putting 20% down and having mortgage payments for the next 30 years,
Right.
and which they might not qualify for on a fixed income,
Right.
and instead of the other alternative that they probably know about, paying all cash,
Yep.
with my lifestyle loan, they could bring $600,000 to the table, put the other $400,000 in their savings or investment accounts, and never have a monthly mortgage payment. So they bring $600, I loan them $400, they never make a monthly mortgage payment.
I
So
want
not
that.
only, yeah, so
I don't
not
want payments anymore.
right. So not only can they put that $400,000 in their savings or investments, but they could end up buying a more expensive home than they first thought possible because they're not bringing all that cash to the table.
That's really interesting because, again, like looking at financial alternatives to purchasing or selling and purchasing and really finding yourself lost in the process.
Right.
I would imagine that when you're talking to some of these people and you're proposing what it is that you offer, some of them probably can't believe it. Like, how do I not have a mortgage payment? And what are you talking about? Why didn't
Right.
I know about this?
Yeah.
And unfortunately, in California and where our pricing is at and in inflation, I think a lot of the boomers are probably struggling, mentally about how do I stay here?
Right.
Right?
This gives them a way to stay. Yeah, this is the best kept secret out there. It's an FHA insured loan.
Okay.
It has been around since 2008, but it is becoming more popular because we have so many baby boomers, and the baby boomers are starting to need to downsize. They've got too many stairs, too much
Yeah.
maintenance on their homes.
Yeah.
They want to be closer to their grandkids. So it's the time. The time is now to start really looking into these loans.
So once they get a loan, when let's say they do it on their existing home, or they get a lifestyle loan and they find a home that's more appropriate for them, what are they responsible for still paying or taking care of?
Yeah, so they're responsible for paying their property taxes and
Okay.
homeowners insurance. These loans, like you mentioned, these loans can also be used to age in place. So if you want to stay in your existing property, I can help with a reverse mortgage, which eliminates all their existing mortgage payments and can provide them some additional cash flow. But back to your question, they're responsible for their property taxes, homeowners insurance, HOA dues if they're in a condo or a townhouse. Or a PUD, a planned unit development.
Yep.
And they need to have some money coming in just to pay for their utilities, transportation.
Sure.
So it is much easier to qualify for these loans than
Yep.
it is a traditional mortgage because there's no monthly mortgage payment. They're not paying any principal or interest. All repayment is deferred until they permanently move out of the house or pass away, or until the last borrower passes away.
Okay.
Yeah.
And the one thing I would love for our viewers to also understand, because you said it's an FHA-backed loan, which means it's a government-insured loan. So let's say someone got, this, if they implemented this on their current property, and let's say they lived another 30 years, and there was an accumulation, right, because they don't have to make a payment, so there's
Correct.
an accumulation of what they've been borrowing against the property.
Right.
And let's say if they borrowed more than the house is worth, when, let's just unfortunately say, and it's a reality of life, they pass. What happens if, let's say, $1 million is owed, but the house is only worth 700,000,
Yeah.
and then the children inherit the house, or an heir gets the house? What happens?
Yeah, so keep in mind these are non-recourse loans. There's no personal liability to repay the debt. Only the home is responsible. So if that happened, that the house was not, the loan balance exceeded the home value when the borrower passes away or moves out, then HUD covers the difference. Also, keep in mind that we only loan about 40 to 50% of the home value.
Okay.
So as the money that they borrow is growing over time because interest is accruing, the home is also growing in value because,
Okay.
as we know, in California, real estate appreciates at a very
Absolutely.
nice rate over time.
Yeah.
So the home's growing in value, the loan balance is growing in value. Typically, unless there's some horrible real estate crash right before they pass away,
Right.
or unless interest rates were extremely high during that loan term,
Sure.
there will be equity remaining for the family.
So the beauty of this is, if something happened in the market, again, it's like you said, a non-recourse loan, so no one is responsible for paying the overage,
Right.
which that's amazing because you don't have a creditor chasing you, which is one of, that's a fear for a
Right.
lot of people. And then not having that pressure
Yeah.
and just alleviating any thought of financial stress, living in there, not having to make a mortgage payment, still understanding you have equity growth, the interest rate growth in there as well. And it's almost like they have a line of credit on the house to a certain degree.
Sometimes they do. Yes,
Right.
there is a line of credit option in some scenarios where it's a line of credit that's available. It's guaranteed to be there. It can never be reduced, frozen, or canceled as long as they live in the home. So yeah, there's a lot of different ways that the loan can be structured depending if someone's looking to purchase or if they're looking to age in place, or if I have a lot of clients that are using home equity to pay for in-home care. I've got clients that are paying $15,000 a month right now for in-home care.
Oh.
It adds up quickly. They did have a lot of money saved. They don't anymore because they've been paying for in-home care for a few years, and now they need to look at home equity. So the average American does hold about 70 to 80% of their net worth in their home equity.
Yeah.
So it only makes sense that we might need to tap that asset during retirement, especially for example, people that are drawing from their retirement portfolios during bear markets. In retirement, you don't want to be drawing from a retirement
No.
portfolio in a bear market. So you could set up a line of credit on your home equity instead. It's called a buffer asset. It's not
Okay.
correlated to the market. And during bear markets, instead of drawing from your retirement portfolio, you could draw from the home equity instead. And then switch back to drawing from your portfolio when the market ticks back up.
Right.
So it just gives you options. It's about strategically looking at all your assets, figuring out which one do I want to draw from. You don't want to run out of liquidity while you're living. That's the key. It's better to use that house, which you're protected to remain in for the rest of your life, up to age 150.
Wow.
So make sure you're taking your vitamins.
Right?
And you never have to pay back the loan as long as you live there. But also you can sell at any time if you want to. So if someone decides to sell, they pay back the money that they borrowed plus the interest. The equity is always theirs.
Now you know why you have to reach out to Amanda, right? There's definitely a lot of scenarios that we go through as we're aging, and we can be extremely confused by them and not even know that we have any options. And to be able to tap into your equity, lines of credit, everything else that she can discuss, where you're at as a true consultant, she's going to understand where you're at from your financial portfolio, what you have in your real estate, and how you can age in place, or again, a lifestyle loan. Use the reverse purchase when you're actually unlocking equity and being able to do all those things. She is the expert. So if any of you that are watching this are wondering, how on earth am I going to do it? Now you know you have to reach out to Amanda so she can advise you on how to do it.
Call me anytime.
Absolutely. All our information is on the screen. You've been amazing. I really hope that our listeners reach out to you because I know that the service you'll provide for them will transform their lives. So thank you guys for watching, and
Thanks
thank you
so
for
much
being
for
a
having
guest.
me. Yeah.
Absolutely.
Have a great day.
Thank you, Amanda.
Thanks.
If you've been getting great value out of these videos, please don't forget to subscribe, click on the thumbs up, and make sure you smash that notification bell so that you can be updated anytime I put out a new video. I look forward to bringing more great content your way.